MITI Minister Mustafa Mohamad has refuted a claim by the Malaysian Employers Federation that over 50,000 employees will be laid off this year due to the higher cost of doing business. Tokpa says there will be retrenchments, of course, but the total number won't be that high. He adds that most of those who do lose their jobs will be re-employed by new and expanding business. Tokpa cites, for example, the retrenched workers from companies such as Seagate, Hitachi Global Storage Technology, and Rubicon in Penang. He says a large percentage have actually been absorbed by other firms such as Keysight, Inari, HP, Osram and Infineon. According to the MITI minister, from 2014 to 2016, over 153,000 jobs have been created from new manufacturing projects. An additional 32,700 jobs will be created from investments secured in the first 9 months of 2017. As at third quarter of 2017, total employed persons have increased from 14.42 million to 14.48 million. The Securities Commission has ordered Singapore-based blockchain startup CopyCash Foundation to halt all its activities in Malaysia. This includes a planned initial coin offering scheduled tomorrow. The SC says there is reasonable likelihood that disclosures in CopyCash's white paper, as well as its representations to potential investors, will contravene relevant requirements under securities laws. In its white paper, CopyCash Foundation said it is a social travestying platform. It is essentially an investing platform built on blockchain technology that allows investors to view trading actions of other investors, and it gives them an option to automatically copy those actions. The foundation had planned to issue 50 million of its own cryptocurrency, dubbed CopyCash Coin, which piggybacks on the Ethereum network. Tanah Nasional's shares are said to be on track to hit 17 ringgit. This is after it rose to its all-time high closing of 15 ringgit at 70 cents yesterday and continuing its uptrend today. HLIB's Louis Loh told The Edge that based on the technical indicators, Tenaga is likely to hit 17 ringgit on strong buying interest. He also highlights that the foreign net buy for the past 6 consecutive days is likely to see some flow into bigger cap counters like the utility giant. Meanwhile, Affin Hwang's analyst Ng Chi Hong says Tenaga's performance since early December is largely in line with the performance of the KLCI. He says in terms of tariff, the government has made it clear that they will be footing the difference on the generation cost. According to Ng, this is a good indication that the ICPT will continue to work and allow Tenaga to continue with its current dividend policy. According to data compiled by Bloomberg, the consensus 12-month target price for Tenaga is at 16 ringgit and 61 cents. Tenaga ended trading today at 15 ringgit 88 cents. Disappointing corporate earnings have continued to dampen demand for Malaysian equities, and this makes them more expensive on a price-to-earnings basis compared with regional peers. Tusar Mohata, who heads Nomura's Malaysia Equity Research, says margins remain a drag on corporate earnings due to the higher cost of doing business. This is despite strong GDP growth already seeing some translation into improved top-line growth. As such, Mohata recommends investors to be selective with their stock picks. He names the banking, construction and telco sectors as Nomura's preferred pick, as they are expected to see greater interest ahead of the upcoming elections. Nomura is keeping the year-end target for the FBM KLCI at 1,860 points based on corporate earnings growth of 4 to 5%. Equinas has divested its 100% equity interest in Apit Education Group for 725 million ringgit. The new owners are JV vehicles owned by the existing key management team and private equity firm KV Asia Capital. Equinas said in a statement today, these new owners have a combined experience of more than 100 years in the industry. This means that the deal will ensure that the interest to continue providing quality education is constantly aligned. The divestment will meanwhile allow Equinas to recoup its cost of investment. It will also generate a positive blended IRR of 22.3% and money multiple of 1.6 times the capital invested, including dividends received. The Apit Education Group comprises Asia Pacific Schools, Asia Pacific University of Technology and Innovation, and Asia Pacific Institute of Information Technology.